Hey traders, so in this video I want to show you a very simple but yet effective strategy on how to trade the volatility 100 index. This strategy is simple but yet very effective. So if you are having challenges in trading these indexes, try and watch this video to the very end. So immediately after our intro, we'll go straight to the main point. So welcome back. So like I said, this strategy is very easy and effective. And I want you to try it on your demo account to see how it works, then before applying it on your main account. So, and I have like two strategy, but in order for this video not to be too long, I'll just show you one simple strategy here, then I'll do another video on the second strategy, which I'll tag in this video. And not to forget, we have like two other videos on volatility 100 and volatility 75 index strategy. So if you are yet to watch those videos, I'll also tag them on the comment section of this video. So if you are yet to subscribe to this channel and this is your first time visiting this channel, kindly hit that subscribe button, share this video, like this video, so that others can benefit. And before we move further, we also have a free Telegram channel where we post market insights and free signals. You can also join us to benefit from this as a community. So without wasting most of your time, let's move straight to the main point. So you can see this is volatility 100 index, right? And we are on the 1 minute time frame. So if you want to trade this simple strategy, all you need to do is to move to a higher time frame like the 1 hour. So once you move to the 1 hour or 4 hour time frame, I prefer using the 1 hour particularly. So what you would do is to mark out some psychological level where you think the market reacted. You mark out each highs and lows where you think you see the market reacted. Just follow me gently. We'll get to the main point. This strategy is very easy and super effective. So now let's mark out our main zone. So you need to know where the draw on liquidity is on the higher time frame. So like you can see here, let me get this. You can see here exactly this place. We have a draw liquidity around this zone. You can see around this zone. So now let's mark out, like I told you, let's mark out the psychological levels of any zone you see the market react. Just let's mark it out. Let's mark it out. You can see the markets react. Remember, this is 1 hour time frame. Try this, I said, on your demo account and get back to me on your results. You can chat me via Telegram or drop a comment on this video. I received so many feedback on the other videos we did on volatility 175 strategy previously on this channel. And I can tell you that we have very nice strategy that we have backtested and they really work. So what you do is that you keep marking as much as you can. Just mark each zone as much as you can. Each place the market reacts, mark it as much as you can. Mark here as much as you can. Right? mark here because you can see the market reacts around this zone. You see the reactions I'm talking about. Market reacted here and turn, market reacted here. You see all the reactions I'm talking about. That is where you will mark, just mark each zone as your psychological level. Some people think you cannot trade psychological level on volatility index, but I can tell you it truly works. So just follow me gradually on this. And you can see here we have a very long buy. So you can actually mark any zone around there if you feel like, but if you don't feel like, you can just leave it that long. But personally, I do mark if I see a very long queue like that. So let's mark. So I think this is okay by now. So now let's move to the next step. After marking this zone, what will be our next step is for us to get a trend line and mark anywhere we think the trend can touch. Just anywhere we think the trend can touch, we should mark it. For a trend line to be valid, we need like 2 to 3 touches. Don't see because a trend does touch one touch, then it is valid. No. We need more than at least 2 touch to 3 touch before a trend line will be valid. And if you check this, we have how many touch right here? You can actually also change it to a line. We're on candles. You can change it to line also to see more for yourself, to actually perfect your trend line. If you want, you can just change it to line to perfect your trend line, right? Okay, so here we have up to almost more than 4 touches. So aside that, if you feel like, you can also leave it on the candle stick, right? So we have marked this trend line. What you do next is to mark if you met the market in a buy situation, right? If you met the market in a buy situation, you have to mark this trend line. Or if you feel like, you can start from, let's move this up. Let's see if it touches here. Okay, here we have 3 touches here. Okay, we have 3 touches here, which is fine also. We have 3 touches here, right? So after this, what you will do is to now go to a lower time frame to look for a perfect entry. Now let's go to a lower time frame, lower than 1 hour. So let's go to like 15 minutes time frame or 5-minute time frame if you like. So currently this is our 15-minute time frame. You can see all the psychological levels will mark and our trend line we mark, right? So now how does this strategy real? On the buy side, let's assume you come into the market around this zone. Let's assume you were in the market, you came into the market around this zone, for example, right? You marked your trend line, right? After marking your trend line, you noticed the market reverse to your trend line, right? Remember, we said we should have 2 to 3 touches, right? We have 1 touch here and 2 touch here. Remember, so you're watching the market to follow, to just get your sniper entry and out of the market. So what you would do is that now you are not entering this market here immediately because you didn't come into the market early, right? So you wait for this market to go up and come back to your trend line, which is this 3rd trend line. It can be 4th depending on where you wait the market. So immediately you see that happen, you will enter for a long position. After the close of this candle, it's either you notice a pullback candle around your trend line or an engulfing candle around this trend line. These are the criteria you should check around your trend line. So immediately the close of the candle, you will enter for a long position, and your stop loss should be the low of your psychological level, and your TP should be 2 times your stop loss. That's around 1:2, right? So there's no how you can say this market will not give you profits. Hope you see what I'm saying. You see? So immediately after you notice that, okay, this market is in profit, you can move your stop loss to break even. You move your stop loss, you tighten your stop loss to break even. So if you want to stay longer in this market, like I always say, immediately you see that you are in a profit again, you move your stop loss again to the next psychological level. I hope you get. You move your stop loss to the next psychological level, but giving it a little breathing space, because the market can pull back to liquidate people. And if you are there, it will take you out. So that is why you need to give a little bit of breathing space, right? So that's how you keep going, increasing your TP, or you leave your TP open. Then you keep moving your stop loss until the market takes you out. Or you can, if you don't want any stress, you can just target your 1:2, and that is it. So now, how would you not know that, okay, this market wants to reverse? How would you not know that this market wants to reverse? Let me delete this. The only way to know that this market wants to reverse is when the markets come down and break your psychological level up to the second psychological level. Please take note of this. It breaks the first one and get to the second psychological level. Then this market has changed direction. That is what we call shift in market structure, yeah? So it has changed direction, that this market wants to change. See, this volatility 100 is one of the simplest index to trade. It is one of the simplest to trade in synthetic index. So try this. So immediately you see the shift in the change of character. What you do is that you remember you have already marked your psychological level, and already you have a trend line. We have a rule. The rule number 1 is that the market needs to come to your trend line like 2 times before you can make any decision. The market needs to come to your trend line. If you notice, we have a small trend line around here also. If you notice, we have a small trend line around here, but I would advise you always leave it at the trend line you marked from the higher time frame. So that's why except if you are marking your trend line from 15-minute time frame, then you'll be trading from 5-minute time frame. I hope you get. If you marked your trend line from 15-minute time frame, then you'll be taking your entries from 5-minute time frame. Remember, we marked our trend line from 1 hour time frame. That is why we're taking our entry right from 15-minute time frame. So now, let's move. We're not entering this market until this market come to our trend line. And what happened here, you see, this market came to our trend line exactly at the psychological level we marked, which is this, right? So what will you do? You wait for a pullback candle, an engulfing candle, for example, for you to take an entry. You don't just enter immediately. You wait for this criteria before you take an entry. So now after we notice this, it means we are free to enter for a short position just right below here, beneath here. And we say our stop loss. Here, the stop loss need to be very large because of what happened previously. Remember that long market that happened, you see? Yeah. So that is why our stop loss now here is very high. So Then our TP, remember we said we'll be targeting 1:2. So, or 2 times your stop loss. So you need to take your TP down below. Your TP should be 2 times your stop loss. And don't forget the rule. You need to keep moving your stop loss. Once you are in profit, you move your stop loss to break even. If you notice this market, it never came back to the stop loss again. Right? So now you are playing safe. Even if this market decides to change, if there's a shift in market structure, it will take you out with no loss. I hope you get. So once you are in profit again, you keep moving your SL. You move your SL here, but you need to give a little bit breathing space. If you notice here, if you didn't give a breathing space here, you see what happened? You see this candle came a bit up and shoot out just to take people out, right? Remember here you are already on break even around the side zone, right? So this came out to take people up, but it didn't take you out because of you at least gave it breaking space. Then once in profit again, you didn't go out of the market. You move your stop loss to this zone. You see it? You move your stop loss to this zone. The market came a bit to liquidate people that are putting their stop loss too tight around this side, but you are safe. You get? So now you see this market. This is a live market. I guarantee you that this market is coming to this zone. You see? I guarantee you that this market is coming to this zone. I want you to try this on your demo account and make sure you come back to the comment section here and tell me how it went through. Also, don't forget to join our Telegram channel for market insight and free signals. We do drop free signals with high win rates. So thank you and see you in our next video. Bye.